Hey guys, welcome back. Hope you had a good Christmas and a good New Year. It's January 4th. We're going to look at SPY, GME, technical analysis on them, the futures, options, and the stock. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us on at Happy Money YT, and a Discord server. Link for those are in the description. I stay pretty active on Discord, not always on Twitter. Well, pretty active on Twitter too, but haven't been able to have a video in the last week or so. I've been pretty busy. So anyways, SPY, I can't even remember where we left off, but basically to me it looks like it's consolidating before a move to the up or downside. If I were to guess, it'd be down just because it looks like a head and shoulders here still. And this trend has been pretty consistent with these peaks. So yeah, that's basically it on the SPY. There's just data that's moving around. This morning was or this afternoon was FOMC. This morning was manufacturing data, I think, and then tomorrow's jobs data, and then this week's packed full of data, so you can kind of see the volatility here. That was the first set right there, and then here is FOMC, I believe. No, this is actually Euro close. So Euro close today caused a big move. Sometimes it causes a move, and this is Euro close right here. Rip. Here's FOMC. So slightly bearish, I would say, but not too crazy. And market's just been basically trading in a range here. So I've been trying to trade it with the futures. Good days and bad days. Yeah, I'm trying to hone in on what's working and do more of that and cut out what doesn't work. GME did break that support, multi-year support of kind of 20 range. So that huge bull flag, that huge wedge, whatever, basically broke below that. So when a floor falls out like that, you're basically looking for the next support more or less. And the downtrend I don't think is over yet on GME, so more discounts are coming, I believe. We got an engulfing candle yesterday. These last 6 days set up kind of a bear flag. Yeah, I had a 625 for support. Next one after that, I think it's like 1150. And yeah, we'll see if it holds before there. But after that, then it's kind of that $10 range, which seems crazy at this point. But we'll see. We'll see if it moves with the market and if the market's ripping up or not. I'm not sure if I'm going to be able to hold my long-term shares on it if it gets that low, unfortunately. So I might have to even close those. The ones I have long-term cap gains on or capital losses, but I was holding for long-term positions, but I'm not going to have enough capital or margin to even trade futures or anything if GME isn't at the 11. So I haven't quite decided yet if I'm going to cut the capital gains shares, the long-term shares, and reposition at a lower time or what. But all the swing shares I closed back up here when we broke through that like 20 area. Once we broke that support, I closed out, or sorry, right here, this 19 area. 19, like basically once we broke that support. And we'll look to maybe get in more. I'm having the capital right now to use on a cash secured puts, which I haven't opened yet just because this chart still looks very bearish to me. I actually opened up long puts 2 days ago, so Friday, this day, opened up 2 trading days ago. Opened up long puts, 18 strike, and yeah, I'm just gonna ride those down. The one thing we almost had today, day's not over, we've got about 30 minutes. If we get a big rally, then we might get an RSI divergence here. But it looks like today, with it being low, we're not going to get it. Basically, RSI divergence from this day to this day. But today would have to rip up and get that RSI higher. Yeah, so not looking good for that. And yeah, actually the shares I had on here, I had to close out, and yeah. So anyways, here's what we got for, there's the futures. I'm down a lot today on futures, unfortunately. 2,300, just traded it poorly. Yesterday I was up $1,000, like 1,400. I traded back to about 1100 positive. Today I'm down pretty big. Just not patience. I guess I would attribute some of it to kind of the worst thing that could have happened did in a sense. So wait for this move. I wanted to short on the retest of this. I didn't. It was so volatile this morning. I just kind of sat and waited, made its move down, and then to me it looked like it started bear flagging after it already broke that resistance. And so I went short here actually, and then it made this engulfing candle somewhere, one of these, and I was like, oh shoot, it's gonna go up. So I just like, I'll just hold through the volatility. If it trades in a range, it'll come up, you know, up to here or up to here, and then come back down. I'll be able to get out. So I made that engulfing candle and then just rallied, and then I decided, okay, if it's gonna break the high, then I'll switch and go long, which I wouldn't want to do because that's a huge loss that I'd have to realize. But made the engulfing here was really the big one. So did this, came up here, broke that high, and that's when I realized like the $2,000 loss. Went long here for that break, and then closed out here for a little gain, and then actually went short here. So timed some of the stuff right, and then did this weird bounce and stopped me out. And then I thought it was an ABCD pattern, which would be A, B, C, and then a D. So I went long, then closed back out, and then it was FOMC, and I was like, I just want to wait. So waited through the volatility of FOMC. Actually went short somewhere. Yeah, I went short here, caught a little move to there, closed it out, went back short, and I just feel like I'm over trading and trying to revenge trade, so I stopped. But now it's actually making the move that I wanted. Just couldn't hang with the volatility today, and then I'd get stopped out because it went to go against me. So yeah, I just kind of felt a little revenge tradey today, so I just want to stop before I get too much further into the hole on that one. But it is coming down now, and I am on the longer term, I am bearish. But with that said, data tomorrow morning at 8:30. I think it's jobs data, so that could have a pretty significant impact. And then we have more data this week coming. So it's Thursday initial jobs claims 8:30. Trade deficit, those will probably be the main ones that move at 8:30. Bullard, he's oftentimes bearish when he speaks, but we'll see. That's at 110. And then Friday, non-farm payrolls will move it, unemployment rate will move it, ISM, labor force, all these 8:30 will move the market, most likely. These 10 o'clock data probably won't move it too much. Bostic speaks. So sometimes when these guys speak, it moves the market quite a bit. Depends on how touchy it is, but yeah. TA looks bearish. Those people are speaking, and then we have all that data. So any man's guess at this point. Here are the 18 puts I have on GME, up like 30%. Yeah. And then I have these 15 put. I got a bunch of 15 puts because I was like, if I want to close those 18 puts, I won't be able to because of margin, so I'll have to get 15 puts to be able to close these and still be able to trade futures, basically. So the question now is, do I close these long-term shares and then just accept that if the squeeze happens, or if there's some significant squeeze or move within a year of when I buy them back, am I content with paying the higher capital gains tax? So I probably am, just because of my financial situation. Things have dried up, and a lot of it's just the money that I've wasted on the market's dried up. But some of my e-commerce business and real estate it's kind of all started to slow down, basically. And yeah, so I need to work harder on being just profitable in the market, more or less, and not just kind of speculation, throwing money around. So probably need to start just getting back to cash secured puts, and I will be doing that, hopefully on GME, but I don't want to do it too premature, because I've done that before. On one of these spikes, I started doing cash secured puts, like here or here, I can't even remember. It was a long trend down, so then I got stuck in it for a long time. But I don't think we have a long time, but where we're at now, 17 to 11. If we get there, or even 10, doesn't seem like many numbers, but it's actually pretty significant percentage-wise. Let's see where we're at. So 10, that's 38%, 40%. So pretty significant. So I'm gonna hopefully have enough funds to wait on the capital and then do some cash secured puts closer to a bottom, and also try and trade these futures and get some profits there. Natural gas is another one I trade. This thing is, it's too bad I really didn't catch much this move down. A lot of gaps, and yeah, I don't know. Morale's been tough. It's been tough with the having all this financial stress and then company, and it's like yeah, so dealing with kind of a lot, but that's kind of what happens. So anyways, still have GME. I still think there's huge potential with it. I think a lot has happened since the split, and I'm not sure exactly what, but yeah, it seems strange it hasn't made its move yet, as far as kind of a cycle, but it's possible we're just in one of these longer extended downtimes. So we have had that before, where they basically are kicking the can or deferring OPEC's obligations, as Pickle puts it. So could be that, and seems plausible. And yeah, that's what I got, guys. We'll see you on Discord. Sorry to be Downer Debbie. Have a good start of your new year. Hopefully you can be profitable and trade smart and be patient and exercise good risk management. Thanks, guys. We'll see you on Discord. Peace out.